Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, and I want to give a little lesson that might help you improve your trading strategy. And it's called Back Check What You Might Have Missed. And I do it with about every trade I make to see if I miss something where I can curtail it a little bit into my next trade. I like to predict the future when I'm trading, and I do it with chart patterns, moving averages, and being in the now. Now, we have a lot of bears out there right now. We have ups and downs. I mean, one day everybody's all excited, and then the next day everybody thinks the end of the world's coming. And I don't see it that way. But, things could tighten up and get a whole lot worse, but they're just not as bad as I've seen in the past. So I'm just kind of writing this off right now. So being in the now is a very important part of the trade. And the second part is back testing your strategy. So I've got in this here fallen wedge. I got a lesson on if you can count to 3, you can trade with me. And if you can count to 4, you might make a little bit more. So I'm looking for the sweet spot in about every trade I can trade or I can find. And usually you see it in chart patterns. This one here, we had a fallen wedge. So I'm sitting here looking at this fallen wedge, and I'm adding on. I've already got in the trade because I think we hit a double bottom here and we were going to bounce up. Or maybe right in here is where I got in the first trade. And then it dipped on down on me, and I've been waiting quite a bit adding on to this trade. This is on a 1-minute time frame. So as we started getting into number 4 down here, number 3, and we had 1, 2, and I used the bodies of the candles. Not the wicks. The wicks are confirmation, but I'm using the bodies when I'm calling out these trades. And we had what you call fallen wedge. We have lower lows, and in that lower low we also created what you call an inverse head and shoulders, which both of these patterns are very bullish. So I'm going down and I'm counting. I'm telling the room, I'm saying, 1, 2, 3, 4, 1, 2, and I think we might have a 3 breakout. We didn't break out here. We pulled back. This is called a sweet spot of the channel of the flag. So I added on one more time to bring that cost that I had in my stock real down because I'm bullish. I see an inverse head and shoulders, and I see a fallen wedge. The inverse head and shoulders is a little bit more bullish, but the fallen wedge always, I can almost 99.9% rely on for a breakout. So if you can count to 3, you can trade with me. 1, 2, 3, and then there's your 4 with the wick. Then you got 1, 2, 3, 4. So this was the sweet spot as it starts to tighten up. So then you start getting really ready. If it doesn't break out soon in this channel, it could just dive on you after so many touches. But we were in the sweet spot, which is 3 and a 4. Then we broke out. Then we started creating another flag, and I got down there again, down to where my last entry was at $1. I went, shit. So we started breaking out in another flag. 1, 2, 3, 4. 1, 2, 3. Bing, the sweet spot of the triangle. A lot of people don't pick this stuff up because they don't know how to read charts. So after every trade you take, you want to go back and look for chart patterns and see how much you might have missed, and you can use that into your next trade. Or gives you more confidence. Because like I said, there's a lot of bears this weekend came out and said that we were ready for a big old 2008, 2007 drama in the market again, where we'd have a major pullback. And I don't see that. I'm more bullish now, a lot more. And I was a beginner back then. So I came in at a real bad time in the market where it dropped 50 points under Barack Obama. And then they started writing out the stimulus checks, the Highway Act that went straight to the unions, and just a lot of checks were being sent out. They bailed out General Motors General Motors was at 50 cents a share. Ford was at $1. Hog was at under 10. There was a lot of good opportunities back there to be in the market. And I took advantage of them times, knowing that I was real new. But I've seen times a whole lot worse than what I'm seeing right now. So I always say go back and back test. Now we see we've got this little megaphone pattern forming right here, a rising megaphone. I'm going to take this trend line off. I got that on the 5-minute. I'm going back and forth, getting hints from people in the room. Hey Jim, we're about to hit the 63 EMA on the 5-minute. I always call that an exit idea. But after going through these two patterns here, I felt fairly bullish in the trade. And I wanted to stay in the trade. So this was a 63 right here. Now when I'm trading, I'll use a /ES VWAP method. So I'm using the VWAP as a resistance to break. This is on the 1-minute. Once I knew I broke that VWAP, I was sure to go ahead and take profit. And it pulled back on me, and then the second time up, I got out of the trade. But I'm using the /ES for the VWAP because it don't really show up to me on the SPX. It shows up on the SPY. So I also have another chart set up to where I have the SPY and the SPX. It's around here somewhere. Yeah, SPX, and then I can use a SPY VWAP as a support level. So on the SPY, I'm at support on the VWAP, and that means that I could probably bounce here off my support channel that I drew in here previous. So the secret of the story is look for the sweet spot in every pattern and go back and retest and see what you might have missed, because that thing you might have missed might have been a leading indicator to stay in the trade. So I just want to give that, I really go back and I look at everything. I look at the candlesticks, see what kind of breakout we have here. These are all bullish candles. These are all bullish candles. We have 3 black crows here with a tweezer bottom. If I miss that trade, I have a second chance to get in it with a double bottom with a higher low. If I can count to 3, you can trade with me. 1, 2, 3 on the 5-minute. On the 1-minute, 1, 2, 3, 1, 2, 3, 4, sweet spot. If it didn't break out there, I'd want to take my profit and get out of the trade. But as we broke out, it gave me more confidence to stay in the trade. We had the 9 cross over the 21 EMA. We had the 9 being respected for a good period of time up on the 1-minute. So I'm looking at the little things that turn out to be big things when you're wanting to look at a trade. Now that we're above the VWAP, I even have more confidence than I had before. What was resistance now becomes support off the 63. That 63 here was resistance, 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 resistance. Then that's the red line. So once we broke above it, that gave me more confidence in the trade. I still stayed in the trade after the dip. You know, I had enough confidence on a real bad day to stay in the trade where everything's just pure negative. But the charts are telling me a different story. So I'm asking you to go back and study the chart itself. Look for the candlesticks that cause the reversals. Look for chart patterns and see if they're holding what moving averages, and check the VWAP on the /ES or on the SPY when you're trading the SPX. See, now I'm looking at this chart and what's it telling me? It's telling me that we broke the 200 SMA and EMA. So I want these two moving averages, the 200 EMA and SMA, to become support levels. And as we go throughout the day, we pull back and we hit that 200 right here. We hit the 200 right here. We hit the 200 EMA right here. So we have a triple bottom now on this breakout. This is called a megaphone. This is an open mouth megaphone with a head and shoulders. Megaphones just don't go straight out. They can go sideways. They can go down. They can go up. So the next resistance would be this shoulder line up here at the top. Solid support would have been a triple bottom. If you missed this trade and the trade before that, you could have got in here and scalped a double bottom to a triple top, or you'd come down here and got the triple bottom and run it up to a head and shoulders. The head and shoulders high is up here, so you can still probably stay in the trade. And again, mind you, this is the worst hour of the day I like to trade, but I stayed in the stock because I felt confident. So I'm asking you, after, like this trade right here, 3 black crows, you have a hammer, inverted hammer, a hammer with a long leg doji, another hammer, inverted hammer, all of them are bullish. And here you got another pullback. Hammer, inverted hammer, hammer, spinning top hammer, hammer, tweezer bottom. All them candles are bullish. Tweezer bottom, tweezer bottom. Now, I called this here trade out. I said we got us an ascending triangle. It looked very confident in this trade right here. This one right here. So I drew out this ascending triangle. And I felt very bullish because I saw this ascending triangle. And then we pulled out of it with a long leg doji hammer right here, which gave me the confidence to stay in the trade. Then we end up forming a rising wedge. So at that same time we formed a megaphone. And we broke out of that 1, 2, 3 again, the sweet spot. Counting the wick is number 4. 1, 2, 3. So we're in that sweet spot again, and it broke out. Then it came back down again, then you got a triple bottom. You held that megaphone that you created earlier today. So if you were in the trade and you got stuck, you weren't paying attention, you could have added a little bit more here and took this tweezer bottom off that third support, off that megaphone, and kept you very bullish. So I'm just constantly reading it. I think every chart tells a story. It can tell you either you're bearish or you're bullish. We had a golden cross where the 50 SMA crosses the 200, where the 50 SMA crosses the 200 SMA. That's called a golden cross. That means that we could have more bullishness in the trade. So I can just keep seeing more and more things as I go through this chart pattern. So that's the name of the game. Go back and retest what you missed, and you'd be amazed how much that improves you down the line. My name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Have a great day.